If you are an entrepreneur, freelancer, or small business owner in the United States, you might be making a huge mistake without even realizing it: not paying your quarterly taxes on time. This can cost you hundreds or even thousands of dollars in penalties and can severely impact your business's financial health in the long run. But don't worry. In this video, I'll explain everything you need to know about quarterly taxes in a simple and direct way. From what they are and who needs to pay them to how to calculate and pay them hassle-free. If you want to avoid unpleasant surprises with the IRS and manage your taxes like a pro, stay until the end. Before we begin, if you find this content valuable and want to learn more about managing your business properly, subscribe to the channel and turn on notifications. Now, let's get into the key information. When you work for a company as an employee, your employer automatically withholds a portion of your salary to cover federal and state taxes. However, if you are self-employed, a freelancer, or a business owner, the IRS does not withhold taxes for you. Instead, they expect you to pay estimated tax installments each quarter. These payments are known as estimated quarterly taxes and are essential to avoid accumulating a large tax bill at the end of the year. Quarterly taxes include income tax, self-employment tax, which covers Social Security and Medicare. But who is required to pay them? If you expect to owe more than $1,000 in taxes at the end of the year and you don't have automatic withholdings, you are likely required to make these payments. This applies to freelancers and independent contractors, business owners and startups, entrepreneurs with income not subject to withholding, people with significant earnings outside their regular employment. If you fall into one of these categories, ignoring quarterly taxes can be costly. Now that we know what they are, let's look at when and how they must be paid. The IRS has set 4 deadlines per year for entrepreneurs to pay their quarterly taxes. April 15th, first quarter, January to March. June 15th, second quarter, April to May. September 15th, third quarter, June to August. January 15th of the following year, fourth quarter, September to December. If you don't make these payments on time, you could face penalties in the form of interest and fines. The IRS charges a daily fee on unpaid taxes, meaning that the longer you wait, the more you owe. Additionally, these penalties can accumulate and affect your ability to obtain loans, credit lines, and even investments for your business. Now that we understand the importance of paying on time, let's see how to calculate exactly how much you owe. Calculating your quarterly taxes doesn't have to be complicated. Here's a basic formula to estimate them. Total income, deductible expenses, x approximate tax rate. Quarterly taxes are calculated based on net income, meaning your earnings after deducting business-related expenses such as software and work tools, marketing and advertising costs, office expenses and equipment, business-related vehicle and travel expenses. If you're unsure about your tax rate, a general rule of thumb is to set aside 25% to 30% of your net income for taxes. You can also use the IRS Form 1040-ES, which provides a detailed guide to these calculations. To make this process even easier, there are digital tools like QuickBooks Self-Employed, TurboTax, TaxAct, H&R Block. These platforms can automatically calculate how much you need to pay and send you payment reminders. Now, let's move on to how to pay correctly. The IRS offers several options for paying quarterly taxes. IRS Direct Pay allows you to make payments directly from your bank account. EFTPS, Electronic Federal Tax Payment System, a free government system for tax payments. Check or money order. You can mail a check to the IRS using Form 1040-ES. Third-party apps. Some platforms like PayPal, Stripe, and Venmo allow tax payments. A key recommendation is to automate payments to avoid missed deadlines and penalties. You can set up automatic payments or schedule reminders in your calendar. One of the best ways to lower your quarterly tax payments is by taking advantage of tax deductions. Some common deductible expenses include home office. If you work from home, you can deduct a percentage of your rent or mortgage. Equipment and software, computers, cameras, editing software, and any essential tools. Travel and transportation expenses, gas, airfare, and hotels for business trips. Marketing and advertising, social media ads, website design, and promotional materials. Advanced strategies include forming an LLC or S-Corp, which could reduce the amount of tax you pay on your earnings. Now that you have a complete guide on quarterly taxes, it's time to take action. Remember, know your tax obligations. Calculate your payments correctly. Use tools to simplify the process. Don't forget to deduct eligible expenses. If this information was helpful, let me know in the comments if you have already paid your quarterly taxes or if you have any questions. Subscribe to the channel for more finance and business tips, and check out other recommended videos to help you better manage your business. See you in the next video.